Hello, friends. Once again, this is your friend Home for Roses, and today I'll be doing a review of the week that just passed. What was my expectation? What was I anticipating? What bias what did I have in mind for the week that just passed? Actually, if you watch the video that I made for the week, for the forecast for the week on my anticipation was supposed to be, you will notice that my British pound USD and British pound JPY, I was looking actually for a buy more than selling. Remember, I always said if you buy in the market or you sell in the market, that you're right. It just depends on the kind of trader you are, and then are you buying at the right zones, at the right places? Are you selling at the right places? So that's just what gives you an edge. If you know what you're looking for in the market, you will have more confidence in your trade and the kind of trader you are. So let's dive in. Remember, I always put a line on my charts. Those lines are there to help me whenever I'm trading with my phones to just know exactly what I'm looking for. So previous week I was looking for more of a buy in British pound USD and British pound JPY than selling. But what did we had this week? You can see that the week sold more than it bought. This is about transparency. It's about being true to what you are doing. I'm not trying to impress anybody, but being true. Yes, sometimes you might get it right and wrong. That's okay. It's part of the process. So what happened? The market sold in British pound USD than it bought. Then in British pound JPY, the market bought more than it sold, as you can see this. Remember, this is purely price action trading, no indicator required, inspired by ICT Michael. So this is it. So let's dive back to British pound USD and see what happened. Where did I started to know that my bias was not right? So this is it. Let's put back the charts, the lines on my charts. Okay, so this is sorry, this is euro. Then this is the British pound USD. All right, we are back on the charts. We go to the daily time frame. This is it. And then I was looking to buy more than selling. We ended the previous week here. Yeah, so I was looking for price to get to this zone, then paraventure this zone before selling. But price didn't do that. When we opened on Sunday, so we dropped to the lower time frame. Yes, it's on the lower time frame using the 1 hour time frame. When price opened, I was looking for price to trade down and take out those lows and give me a reason to buy. Price opened. Normally, I'll wait for Mondays and Tuesday for an entry. You can see Monday wasn't moving, Tuesday wasn't moving, but then as that Monday price opened and took out a high, the previous week high, this should have been the reason for me to start looking for a sell. But Monday is not just good enough for me to conclude that my bias was not in the right direction. So it took out the previous week high, which is this, using this particular candle at the right time. That's the New York opening section. It took out those I should have started looking for, but I was still waiting for price probably to drop down and to take out these lows or create the high, the low of the week, which should be Monday or Tuesday. So we would have started looking for an entry after Monday, Tuesday, the price, and then the target, if it's going to sell, should have been this zone and this zone, this mapped out zone. So price, if we drop to the 15-minute time frame, you will see a better entry opportunity on 15 minutes time frame. So this is where we are on the just want to make the chart bolder for you to see. So price traded up, created the high of the week as at Monday. This is it, the high of the week as at Monday. This is where I should have been start looking for a sell than buy, because I was on the path of buying. So I have to stick with my buyers. Then as at Monday, we traded up, price didn't do much. This is a return to give you an entry during the London section opening. price traded up to this other block here and then started to drop. And the target should have been to exit the market right here. Exit one. Then if you miss the entry on Tuesday, another entry was given on Wednesday. We opened the market price traded up, took out this high, and then breakout. This should have been another entry here for me. If I'm supposed to take this trade, this should have been another entry here. There's a little fair value gap just right here at the zone. We have a fair value gap. Sorry. Yeah, it's little, but it's significant. All right, so if I draw this, you will see it clearly. This should have been an entry in this particular trade, but I wasn't in the trade to sell. So this should have been an exit one and the final exit before price read up. That was it for British pound USD. So the price didn't go in my direction for buying. The bias was not right. So when we drop to the British pound JPY, this is British pound JPY. We opened on Sunday and then the market opened on Sunday, which was okay. This is it, open on Sunday. This is Monday. Monday gave us the low of the week. Then we started looking for a buy because our buyer says buy. During the London session, which is between 2 to 5 a.m., we should be looking for what the market will give us an entry to. This would have been an entry for this as 4 o'clock. Why would we use this as an entry? If I check between this run and this is like the equilibrium price, the Mintra showed of this volume of this gap here. We can see this gap. Should have used the 50% of it, which is here to do. If we use also our Fibonacci retracement, but most I can just use this. This is the 50% of it. So this candle, the 4 a.m. should have been an entry for us to start looking for a buy, to enter the buy. But then that's it. And then we look to exit this market. The first exit for me was this line because it's a monthly um, area of interest. And the second exit for me is this line. Is also a weekly, sorry, weekly. Both of them are all weekly exit point for me. So the first exit is here, but the major one is here. If you watch the previous video, that was where I was looking at for exit. The price get to that place? Sure, it did. That's it, and exceeded the area. All these are the exit points I was looking at for on the weekly. So let's look at those areas on the weekly and see exactly where we are looking to exit the markets. Oh, so as you can see on the weekly, this is the first point of exit, this is the second point of exit, this is the third point of exit, and all three exit points we achieved it. I just moved one. So all three exit points, we achieved them in British pound JPY. And then I showed where the trade entry of the trade would have been because we are looking for actually to buy. So the one of British pound JPY was in the right path and did exactly as expected. The one in British pound USB didn't go as planned. I was looking for buying than selling. Rather, the market sold more than it bought. That was what happened between British pound USD and British pound JPY for the week. That's the review. So if you watch the previous one, you will notice that I said I'm buying for the both pairs, both British pound JPY and British pound USD. This is just to tell you that most times you might not get your buyers right. Accept that is part of the process, but keep whatever that gives you the edge and keep doing that. It's not all about being that you never go wrong. It's about being right most times than being wrong. All right, I'll be doing my focus for the week on Sunday. I'll be posting it on Sunday. I hope you had a very wonderful week of trading. Thank you so much for always stopping by. Continue to come, ask your questions, drop your comment, whatever it is. And I'm grateful that you are here. Together, we'll achieve better and more. Love you and all the best. Subscribe to this channel once again. Thank you. Bye.